Sorry, maybe because of some network issue, the live got disconnected, the previous one. Okay, so let us continue with where we have stopped. So, okay. So now, if you're a student from, if you're from Kerala, you'll have this. Okay. So lottery tax. So when this lottery tax is levied, sir, so this lottery tax is levied on selling of lottery tickets. So lottery tickets buying and selling is not a usual thing. To me from Andhra Pradesh or Telangana, we it's not much familiar for us to buying and selling lottery tickets and all. But when I visited Kerala, I have seen those. There's so many shops. There are like some cell phone related shops or like some electronic shops. There are separate stores even for selling the lottery tickets, so it's most common thing there. So on sale of lottery tickets there will be a tax which is called lottery tax. On sale of lottery tickets there's a tax called what? Lottery tax, levied by state government on sale of, reason is what, sale of lottery tickets. Sale of lottery tickets. Then we have even luxury tax. Then we have even luxury tax. So luxury tax is levied by whom? Luxury tax is levied by state government. Luxury tax is also levied by state government on sale of luxury goods. So on sale of goods there is a normal tax, and if such good is a luxury good, additionally there is even luxury tax on sale of luxury goods. Luxury tax is levied. Then there is octroi tax. There is octroi tax. Octroi tax, another name is even entry tax, also we can call it as entry tax. Sir, understand, generally every state is thinks of giving some kind of benefit to their native sellers than that of a seller who is coming from other state. Sir, we know Maharashtra is our business capital, so many people will take their goods and will be selling in the Maharashtra, because Maharashtra, in Mumbai especially, there is a lot of business being carried out. So the local Maharashtrians will be getting a disadvantage because they are facing intense competition from the other side or other state people as well. So to have a little edge for the Maharashtrians, the Maharashtra government may introduce something like entry tax. If you are a person from non-Maharashtra and coming and selling goods in Maharashtra, then you have to pay entry tax. If you are a local Maharashtrian, you need not to pay any entry tax. So that the tax is called as octroi tax. So a person from other state, to allow such person to sell goods in this state, I mean to allow a person to sell goods from other state, octroi tax or entry tax will be levied. So this also will be levied by state government. So the reason is for allowing the person from other state to sell goods, octroi tax is levied. Then the seventh one is VAT. VAT names are value added tax. Value added tax, it is even called as sales tax. VAT, another name is also there, sir. It is even called as what? Sales tax. So this VAT or sales tax is levied by whom? This VAT or sales tax is levied by state government. This VAT or sales tax is levied by state government. On what? On sale of goods. Sir, on sale of goods already CST is there, na? That is on what? This is on interstate. This is on interstate. But on intra na, seller and buyer are in the same state. So on intrastate sale, the state government will levy VAT. Intrastate sales. Intrastate supply is the reason to levy VAT. Okay. Then eighth one, entertainment tax. Entertainment tax may be levied by state government or even by central government. Entertainment tax may be levied by state government or by, sorry, not central government, sir, or by local authority as well. Entertainment tax may be levied by state government or even by local authority as well. So when entertainment tax is levied by state government or when by local authorities, it depends on state to state. In some states it is levied by state government, in some states it is levied by local authorities. On what? On entertainment events. The reason is entertainment events such as like movie tickets, amusement park related tickets on them. Entertainment events, that is the reason. Okay. And then ninth one is excise duty. Excise duty, the reason for levying excise duty is same. The reason for levying excise duty is also the reason for levying excise duty. Sir, who will be levying excise duty here, sir? The excise duty is levied by central government. The reason for excise duty is what? I have already said. When I am explaining the countervailing duty, I already said what? When a good is manufactured in India, it is supposed to have excise duty. So that is the excise duty, which is levied by whom? Central government. So central government is the one responsible to levy tax on manufacture of goods, which is excise duty. So the reason is here, manufacture of goods. Manufacture of goods. And then there is a 10th one as well, which is service tax. Service tax. So service tax is levied by whom? Service tax is also levied by central government. The reason is providing services. The reason is providing services. You understand? So these are the taxes which were there before introduction of GST. There are this many indirect taxes there. Okay, if you see taxes that were there prior to GST, there is central sales tax which is levied by central government. Reason is what? Interstate sale of goods. And there is countervailing duty which is levied by whom? Central government. What is the reason, sir? On import. On import, it's not just the customs duty, there is something even called countervailing duty as well. The reason for this countervailing duty is what? Because the domestic manufactured good is suffered with excess duty. This good coming from other country should also have such kind of levy. That's why there is countervailing duty. Then there is advertisement tax levied by whom? State government. On what? On advertisements. Lottery tax levied by whom? State government. On what? Sale of lottery tickets. And there is luxury tax levied by whom? State government. On sale of luxury goods. There is octroi tax levied by state government. When? For allowing a person from other state to sell goods. Then VAT na value added tax or sales tax levied by state government. On what? On intrastate supply. Then entertainment tax levied by state government or local authority on what? Entertainment events. Then there is something called excise duty levied by central government on manufacture of goods. And there is something called service tax levied by central government on providing services. So these are the taxes that were levied prior to GST. Sir, beneath this, we need to write some note points also, but to explain you that note points, I need to discuss some other concepts as well. So my suggestion is like, so 3 note points will come here, sir. Around 8 lines are needed. 8 lines. So leave that space of 8 lines. 1, 2, 3, 4, 5, 6, 7, 8. So I am leaving space for those 8 lines and then I am starting with the other concept. So you also leave that space. After discussing some concepts, again I can correlate to this and I could explain those points to you. Okay. So now keep the heading here, input tax credit. We will understand something called input tax credit. There is a supplier, there is a recipient. This supplier supplied goods worth 10,000 rupees. Okay. Now on this there is indirect tax 18%, let's say 1800. And this recipient paid tax plus goods total 11,800 he has paid to supplier. So now ITC understand that tax part in this transaction will be there. No, such tax part can be taken by the recipient as something like a cashback. So he'll make initially 11,800, but he'll get back 1,800 as something like cashback. Okay, sir, why that cashback will be given? If such cashback is there, why can't they collect directly 10,000? Why they have to collect 11,800 and again they have to give it back that 1,800 as cashback? That you will understand. That you will understand further with the examples which I will be giving. So now understand, this recipient will get a cashback of how much, sir? 1,800. This cashback name only we call it as what? ITC, input tax credit. So I'll explain slowly what is the essence of this ITC, why this ITC has to be given. If this ITC is not given, what is the impact, that I'm going to explain now. Understanding the double taxation and cascading. So once you understand double taxation and cascading, then you'll understand it much more better. Understanding double taxation and cascading. Okay. So take 4 columns, sir. There'll be 4 columns. There's a particulars column. There's something called manufacturer, wholesaler, and the third column is for retailer. Okay, manufacturer, wholesaler, retailer. Now cost. The cost to manufacture, let us assume it is 900. The cost to produce such good is to the manufacturer is 900. On this manufacturer will add his margin. His margin he has to add now. So assume he has his margin of 100 rupees. The total price for him is 1000. Sir, we are taking this prior to GST. It's not after GST, prior to GST concept only. Understand? Let's say on this selling price, there is excise duty because these goods are manufactured and is a manufacturer only, no. So there is excise duty. Assume this excise duty at a rate of 10%. 10% now how much, sir? 100 rupees. So after excise duty, the subtotal is how much? 1100. After excise duty, the subtotal is 1100. On this again we'll be levying VAT. Why VAT, sir? We are assuming here both the seller and buyer are in the same state. It is an intrastate supply. That's why we are assuming it as what? VAT. So VAT also let us take it as 10%. Another 110 rupees because VAT has to be levied on this subtotal, sir. On this subtotal, VAT has to be levied. VAT 10% has to be levied on 1100 into 10%. So ultimately the invoice price, I mean, how much the wholesaler has to pay, sir? The wholesaler has to pay ultimately 1210, which we call it as what? Invoice price. Which we call it as what? Invoice price. So the cost 900, margin 100, the selling price 1000. On that excise duty 10% 100. Then the subtotal came to 1100, VAT 110, and invoice price 1210. Forget for the time being ITC. There is no concept of ITC. Forget that. Then, if manufacturer sells for 1210, the wholesaler will get it for how much? 1210. Since he has paid 1210, I mean 1210 rupees, the cost to him is 1210. So forget about ITC for the time being. So the cost to wholesaler is how much? 1210, because that is the selling price of manufacturer. You understand? Now 1210, again wholesaler while selling it to retailer, he will add his margin. Wholesaler while selling it to retailer, he'll add his margin. What is his margin? 100. So it came to how much selling price? 1310. Then excise duty on this also applicable, na? Applicable or not applicable? Check and tell. He is a wholesaler. Excise duty is applicable only on manufacture of goods. So to manufacture only excise duty is applicable. Since he is a wholesaler, excise duty is not applicable. Okay. But VAT has to be levied, na? On what this VAT is levied? 1310. Okay. How much? 131. So overall the invoice price is coming to how much? 1441. Here there is double taxation and cascading. Okay, I'll explain you in detail. So please have this thorough clarity of double taxation and cascading, because wherever I go, whenever I have this IDC discussion, I link always with double taxation, double taxation, double taxation. So you should have that clarity regarding double taxation. See, here I am taking this 1310 breakup. Okay, because on this 1310 only we levied tax at a rate of 10 percentage and we got 131. So just take this 1310. How we got this 1310? This 1310 is nothing but the total of 1210 and 100. How this 1210 came? This 1210 came is nothing. This 1210 is nothing but the previous stage. The previous stage ka invoice price. That previous stage invoice price is 1210. In that 110 rupees is tax and 1100 is the previous stage ka amount. So if I break it here, 1310, you'll have 1000 as the previous stage selling price, the previous stage selling price. Because 1310 we are in wholesaler stage. The previous stage is what? Manufacturer stage. So previous stage selling price is 1000. And then we have 210. 210 is what? This excise duty 100 and VAT 110, that is the 210. This 210 is nothing but what? Previous stage taxes. Previous stage taxes. The tax paid in previous stage is 210. And then there is 100, which is the value addition in current stage. Value addition, because the wholesaler from his purchase value, either because of processing or his margin, he has increased the value only by 100. So that is called as what? Value addition. Value addition. So now understand, if you levy tax on this 1310, if you levy tax on this 1310, you are taxing once again this 1210. This 1210 is already taxed now. When you are levying tax on this 1310, you are levying tax again on this 110, this 100, and on this 1000 also. This 1000 already got taxed in the previous stage for excise duty and VAT. And now in this 1310 also, if this 1000 is included once again, it's being taxed once again. Okay, and then this 100 and 110 is nothing but the tax amount. This tax amount is being added into this 1310, and again it is also getting taxed for once again. So previous stage 1000, on this if you levy 1000 into 10 percentage, which equals to 100. I mean here you got 131, here you got 131, no? So out of this 110, 100 rupees extent because of double taxation. What is double taxation? The same 1000 which got taxed in the previous stage is being again included in this 1310. So it's getting taxed for the second time. So there is a double taxation. So 1000 into 10 percentage, 100. So it is because of this 100, it is because of what? Double taxation. It's because of double taxation. It's because of double taxation. Then you're having here 210. So understand, now on this 210, sir, in this 1310, the 210 is also included now. So now on the 210. So 210 into 10 percentage, there is how much? 21. So in this 131, 100 is because of double taxation. 21 is because of cascading. What is called cascading? If you levy tax on tax, it is called as cascading. Here, the tax amount also being included in this 1310, so there is even tax on tax, which leads to cascading. So this is because of cascading. This is because of cascading. Then 100 valuation. On this valuation, if you see here, hundred into 10 percentage, which equals to 100. Sorry, 10. 100 into 10 percentage, which equals to 10. So out of this 131, 100 is because of double taxation, 21 is because of cascading, 10 valuation. That means this 100 didn't got taxed previously, nor it is even the tax amount. So if you tax this 100 alone, it's correct only, we don't have any problem. But what we are doing, instead of taxing only this 100, we are taxing the whole 1310. Whenever you tax the whole amount, you have double taxation and cascading. So this value addition ka no problem. We don't have issues, no issues on levying tax on it. Absolutely no issues on levying tax on it. When we have issues only on levying 1000 and on this 210. Understand? Sir, here, before going further, I want to tell you, even with ITC also, this excise duty is not allowed as ITC. So this 100 is going to struck until GST will be introduced. So we are still in the prior to GST concept only. Priority GST also, there is ITC. So now, with the same example, we'll do once again with the help of ITC and we'll come to know the impact. Understand? But understand, this excise duty is not allowed as credit previously. Okay, sir, VAT also we didn't took it as credit now, but at least in the second example, we will be eligible to take VAT as ITC. Okay, so before jumping into the second example, we'll just fill the retailer part as well. You'll understand. Here also there is double taxation and cascading. So if wholesaler sells it for 1441, for what price retailer will get? Retailer will also get it for 1441. So the cost to retailer is 1441. And on this we'll add his margin. His margin will take it as like how much? 100 rupees. So if you add it, it is 1541. 1441 is retailer margin. On this, if you add 100, it comes to 1541, the selling price of retailer. On this, excise duty not available, because not applicable, because excise duty is applicable only to manufacturer. But VAT applicable? Yes, VAT applicable on sale. So that means here how much, sir? The tax to be levied here is 154. So it comes to 1705. It comes to 1705. So now also, here also, understand, sir, in this 1541, this 100 valuation is there, and the previous stage 1310, and the previous stage tax amount also included. So in this stage also there is double taxation and cascading. So I am not writing it once again, because already you understood what is called double taxation and cascading. I am not writing it once again, but you should have that clarity. Even in retailer stage also, while taxing this 1541, 100 is value addition, the 1310 is the previous stage one, and 131 is the previous stage tax. So here one, in this 154 tax also, there is double taxation related, cascading related, and even value addition related. Okay, so now we'll move into our second example with ITC. But understand, excise duty is not given as ITC, only VAT is given as ITC. Okay. Sir, it's not complete elimination, but we could eliminate double taxation and cascading with ITC here. Okay. Once GST is introduced, even this problem also got sorted. Okay. But before GST, there is elimination of double taxation and cascading to the extent of VAT. To the extent of VAT, there is elimination of double taxation and cascading before GST. So that part at least we'll understand. Elimination of double taxation and cascading. Elimination of double taxation and cascading with ITC. Elimination of double taxation and cascading with ITC. Particulars: manufacturer, wholesaler, retailer. Manufacturer, wholesaler, retailer. The same example. Cost 900. Margin 100. Margin 100. Selling price comes to 1000. And on this excise duty at 10%, 100. And on this is called, okay, we are taking a subtotal here because on this 1100 VAT has to be levied, so we are doing a subtotal. Then VAT at a rate of 10%, which is 111. Then we'll be getting 110. Then we'll be getting 1210 as the invoice price to manufacturer. So this is the invoice price. Whatever is the selling price to manufacturer, that would be the cost to wholesaler in the previous example. But here what we are doing with ITC, we are eliminating double taxation and cascading. We are eliminating double taxation and cascading with the help of what? ITC. So when we are eliminating double taxation and cascading with the help of ITC, so now first we will understand and apply the logic of ITC. What is the concept of ITC here? Whenever you buy some goods and services, the tax suffered on it can be taken as ITC. So here, understand sir, excise duty cannot be given as ITC. Forget about excise duty. Only focus on VAT part. Sir, excise duty ka relevant also you should get na. Yes, I agree with that. But understand now, excise duty is not allowed. You'll understand afterwards also that one. I'll give that clarity as well. VAT 110 rupees you are going to get as credit. So wholesaler will get input tax credit of VAT 110 rupees. Sir, what I can do with this 110 rupees, sir, if you get as cash back? Sir, the ITC which you get can be used when you are paying any tax amount. Then instead of you paying in cash, you can adjust this 110. You can offset your liability with this ITC. So out of 1210, since you are getting back 110, the cost to you is only 1100 because 110 you are getting back. Okay, so the cost is only here 1100, not 1210. Very clear. Be very clear, sir. Here the cost is not 1210. The cost is only 1100. Why? Out of 1210 rupees paid, 110 rupees he is getting back as ITC. So 100 and 1100 out of this, again add margin 100, 1200, excise duty not applicable to wholesaler. On subtotal, the tax will be levied, sir, which is 1200 and VAT would be 120. Sir, come here. In previous example, it got 131. Now it got 120. How much tax got reduced? Only 11 rupees na. Sir, we need to eliminate what? Double taxation and cascading. Double taxation, if you need to eliminate na, you need to eliminate this 100. And here this 21 rupees. But how much you got saved here, sir? Only 11 rupees is saved. No. You need to think it from cash outflow. Previously, this wholesaler has to pay total 131 rupees in cash only na, because you don't have anything in ITC kind of. But now wholesaler will pay 120 rupees not in cash, because already he is having something called ITC of how much? 110 rupees. 110 rupees. So if we adjust 110 rupees here, effectively he is paying how much? Effectively he pays only rupees 10 to the government. So even though you think like 120 is being paid, yes, 120 is being paid, but the previous stage related tax he has taken as credit now, that would get adjusted, no? So effectively he is paying or ending up with paying only how much? 10 rupees as tax. Only is paying how much? 10 rupees as tax. So understand what ITC will do now. The taxes paid till the prior stage, how many ever supplies are there before me? A sold to B, B sold to C, C sold to D, D sold to ultimately to me. So before me there are four suppliers, four transactions are happened. Whatever the taxes they have paid, that would be eligible for me to set off when I am paying my outward tax. So when I am selling, if I need to pay 500, till now if 400 taxes are paid, that I'll take as ITC and I'll adjust here. Effectively I'll pay only 100. So in simple, whatever is the value addition I made, because when I purchased, that value already got taxed. So whatever the extra amount I put here, that alone has to be taxed. I mean here only this 100 rupees has to be taxed. But instead of taxing 100, we are taxing the whole amount, but the tax relevant to the preceding amount. Sorry, you simple thing, sir. We are levying tax on 1200, but the tax amount on 1100 we are making it for set off. So on 1200 we are levying tax. Sorry, not 1200, sorry, it is how much? 1210. Na? So let me correct it. It's a calculation mistake. Sorry, correct only. Okay, so here understand, on 1200 you levy tax. How much it is? 120. The purchase price, which is already taxed na, on this if you levy tax, how much it is, sir? 10%. It is 110. So that previously paid or taxed amount 110, you are adjusting here, and effectively you are getting taxed only on the value addition which you have been made. So with ITC, now whole amount will not get taxed again and again. Only the value addition will get taxed. Only the value addition will get taxed. So because of that, the double taxation and cascading will be eliminated or will be reduced. So here from customer it is 1320, but the government will get only here 10 rupees. I'll show you that one also. How government revenue with ITC, without ITC, how the consumer price will be there. Okay. So now 1320. Out of this 1320, now retailer will get ITC of 120. Sir, why 120? Here government got only 10 rupees. Now I already said. My preceding stages, whatever the tax is paid, that whole tax amount will be getting to me as ITC. So previously manufacturer paid 110, now wholesaler paid 10. So together I'll get how much as ITC? 120. Okay, so 120 rupees I'll be getting as ITC out of 1320. From there if you subtract ITC part, because anyhow it could be used for subsequent adjustments na, so I'll reduce 120. So the cost to me is only 1200. On this again retailer margin 100, it comes to how much? 1300. Now again no excise duty, not applicable, 1300. On this if VAT is levied at a rate of 10%, 130. But will he pay total 130? No, he has already ITC of 120 na, that would be adjusted. Effectively he'll be paying rupees 10 as tax amount. So total it will come to 1430. So understand, sir, very simple logic. Through ITC, even though you feel like the whole amount is being taxed, that purchase related amount tax you are going to adjust. So whatever is the increase you made in the current stage, that alone is getting taxed. The preceding stages related tax alone is giving to you as ITC, which is eligible for set off. Hope you're having some kind of clarity here. So only the value addition is being taxed, not the whole amount. So through double taxation and cascading, we are going to through ITC, we are going to eliminate the double taxation and cascading effect. So the full amount is not getting taxed, only the value addition is getting taxed. Okay. Through ITC, tax paid on inward supplies is given as tax paid on inward supplies, inward na or purchase, is given as credit, which can be set off with which can be set off with tax payable on outwards, which can be set off with tax payable on outwards. As a result, only the value addition at each stage, only the value addition at each stage, as a result, only the value addition at each stage gets taxed. As a result, only the value addition at each stage gets taxed. So let us, sir, here we wrote an entry in seller books. Now we'll write an entry in buyer books along with ITC. Entry in buyer books. Sir, this purchase we made may be related to some expense, or maybe it is a purchase of good raw material something. So that's why I'm writing it as like either you could debit good or you could debit purchase, or even some cases it could be an expense as well. Good purchase account debit. Good purchase account debit to cash or bank, because we are having an outflow of money. We are having an outflow of money. But sir, this wholesaler ka example only. Let us understand this. We are writing this entry in the wholesaler books only. For what is the outflow to wholesaler, sir? He had to pay the total 1210 he has to pay. So the cash outflow he has is 1210. So the cash which got credited is 1210. So cash balance got reduced by 1210. But the goods and purchase he will be debiting only for 1100. What he has to do the other 110? So 110 is nothing but input tax credit. Input tax credit account debit 110. Sir, 110 why we are debiting, sir? Sir, ITC is an asset. ITC is an asset for us. Why it is an asset? Because the input tax credit can be used to set off our outward tax liability, which reduces our future cash outflow. So ITC is an asset for us which could reduce our future cash outflows. So recognize it as an asset. That's why ITC got debited here. You understand? Okay. So we'll be moving to the next concept, sir. Need for GST. Need for GST. First one. So if there is ITC, if there are taxes previously also, why you need to introduce ITC? It's okay with following these taxes. Now, what is the need for introducing a new tax here? That we need to understand, right? Okay, so that would be explained here. What is the need for GST? Okay, first point. First one, CST, Central Sales Tax paid on interstate sales CST paid on interstate sales is not given as ITC. CST paid on interstate sales is not given as ITC. Okay. Sir, when CST is applicable, what is CST? Again, don't forget that CST means what? Central Sales Tax. I already said CST is levied by whom? Central Government. Okay. Since we have said like the tax paid on preceding stages is given as ITC. But if the tax paid is Central Sales Tax, then that is not allowed as ITC. So that is one problem in the pre-GST era. VAT paid given as ITC, but if it is on an interstate transaction, Central Sales Tax is paid, that was not given as ITC. So that is the problem for us. So CST paid is not allowed as ITC. If it is not given as ITC, this amount will be added into the cost. Once it got added into the cost, again it leads to double taxation and cascading. If it is given as ITC, then there is a elimination of double taxation and cascading. Since it's not given, it's a problem in the pre-GST era. So to sort out that, there is a need for GST. Second one. Excise duty paid on excise duty paid on manufacture of goods. Excise duty paid on manufacture of goods is not given as a credit. To traders. Excise duty paid on manufacture of goods is not given to traders. That means to another manufacturer given a yes. So in pre-GST era, there is a differentiation between manufacturers and traders. For manufacturer, excise duty is given as credit. For trader, no excise duty is given as credit. So we will understand it. We will take an example and let us understand it. MRF company, sir. MRF company. Okay. It sold tires to Tata Motors. Sorry, sir, wait here. Give a lengthy line and then branch it. Because we need to write here few lines. Give a lengthy line. MRF sold to Tata Motors. and even to some other person. Let's say to Manideep Traders. So two people, Tata Motors. Sir, in the name itself, it suggests like I'm a trader. Whereas Tata Motors is a manufacturer. So I don't need to explain it once again. Tata Motors is a manufacturer, Mandeep is a trader. Excise duty paid on manufacture of goods is given as credit only to whom? Manufacturers, not to traders. So MRF, sir, for both of them, the selling price for Tata Motors is also 10 lakhs, some tires being sold. For this trader is also 10 lakhs. And on this there is an excise duty as well at a 10 percentage, which is 1 lakh. Here also again 1 lakh. The subtotal is being 11 lakhs. On this again VAT is levied. VAT at another 10 percentage, which comes to 1,10,000. Here also 1,10,000. So total come to the invoice price will come to invoice price will come to 12,10,000 here, and here also it will come to 12,10,000. But understand, sir, this 1,10,000 VAT part is there, na? This alone will be given as ITC to this poor fellow, me. Okay, I'll get ITC of only 1,10,000 only. So what's the sin I did? The sin I did is being a trader. But since Tata Motors, na, it will get ITC of both excise duty part also it will get ITC, and even this VAT part 1,10,000 also it will get ITC. So both it will get ITC. So it's getting ITC of 2,10,000. So there is a clear distinction or differentiation between manufacturers and traders. So this is a problem. So to sort out this problem, GST has to be introduced, which shall not show any discrimination between manufacturer and trader. Both will have a free flow of credit. Sir, understand here, if Tata Motors, so since they are getting 2,10,000 as credit, for them the cost will be taken as, for Tata Motors, in their books they will take cost as 10 lakhs only. But here he will take cost as 11 lakhs. When the cost is increased because of this tax amount, again there will be double taxation to the extent of this 1 lakh and cascading, all these will things continuing only. So to have a proper elimination of double taxation and cascading, credit has to be flown to every recipient, irrespective of whether he is a manufacturer or trader. So that is not possible in the pre-GST era. So GST is needed. Third, non-integration of VAT and service tax. Non-integration of VAT and service tax. Okay, so we should understand what non-integration of VAT and service tax. So what is this? So let's say a building is being constructed. Okay, so these buildings are being constructed. So which is like a works contract. Works contract, it involves both supply of goods and services. So a contractor agreed to construct building. For such construction, labor, engineer, whatever the services needed, he will only consider, he will only supply. And even the cement, iron, any other metal, the sand, bricks, everything he will only provide. So the contract is to construct a building for 5 crores. So in this 5 crores, that contractor only has to bring the material and even the service part, laborer part as well also. So now building construction is for 5 crores. Since it involves both goods and services are involved, since good is involved on this 5 crores, VAT levied. Since good is levied, good is supplied. In this 5 crores, since service is involved, there is even service tax. So since there is no coordination, integration between VAT and service tax, VAT is levied by whom? State government. Service tax is levied by central government, and there is no proper coordination between central and state governments regarding the taxation on a single transaction, on a single amount. They are levying both VAT and service tax, which leads to again double taxation, cascading. All these things will happen. Then fourth one, non-inclusion of non-inclusion of several state levies into VAT. Non-inclusion of several state levies into VAT. Sir, understand, this is a simple point. If you see the page where we have discussed the taxes that were there prior to GST, here there is advertisement tax which is levied by state government. There is lottery tax levied by state government. Luxury tax levied by state government. Octroi tax levied by state government. VAT, entertainment tax, so all these are levied by state government. If all these are levied by state government, why this many separate levies? They could have made one levy, na? Okay, sir, let's say you have bought a luxury car, sir. Okay, luxury car, na? So let's say Range Rover. Range Rover car. How much? Some 5 crores will take, huh? So assume some model with 5 crores value will take. So 5 crores, at least example only, na, will take. We are not anyhow paying for taking an example, no. We'll take 5 crores. If needed 50 crores also will take. Sir, 5 crores will get Rolls Royals, you'll say, huh? Okay. 5 crores. On this, there is luxury tax. Why luxury tax? Since it is a luxury product. Let's take 10% only. There is 50 lakhs. If you total it, it is coming to how much? 5 crore 50 lakhs. On this again, VAT also has to be levied, na? 10%. There is 55 lakhs. How much it is coming to? 6 crore 5 lakhs. That is only, na? 6 crore 5 lakhs we are getting. Sir, if you see here, both VAT will also go to central government, state government, luxury tax will also go to state government. If both are going to state government only, why they need to be levied separately? They could integrate them, na? They could include them as a single tax, na? So they could classify the goods into separate them, and they may levy a separate tax rate on luxury cars instead of introducing two taxes. Because of this, there is a double taxation, cascading. So to eliminate that, all the state levies has to be included into one tax. Hi Yogesh. Next, fifth one. To bring uniformity among the tax procedures and collections. To bring uniformity among the tax procedures and collections. Okay, sir, VAT law is different from state to state. VAT law is different from state to state. In AP, there is one VAT law, Tamil Nadu, another VAT law, Karnataka, another VAT law. And excise duty ka provisions different, service tax provisions are different. So, since we are naming it as an indirect tax, but it has 10 different laws which has different concept interpretations, different kind of due dates. So all this has made the whole indirect tax system as a mess, complex. Okay, so you cannot understand how the ways or how the things are going on also. So even from department also, one time service tax department will come, one time VAT department people will come, one time excise duty department people will come. So all these kind of audits, assessments, everything has made the system as a mess. So they need to simplify this. They need to integrate all these things and need to bring a simplified law which has to clear all these compliance related problems. It's not about paying tax alone. It's about the compliances. So I need to file a return for service tax. I need to file a return for excise duty. I need to file a return for VAT department. I need to file a return for entertainment tax, local or else to related to lottery tax, luxury tax related. So this much is a burden on the taxpayers. So they need to simplify it and they need to bring some kind of uniformity. So these are the hitbacks, the problems in the pre-GST era. So to how to sort these things and to have a smooth functioning of the tax system, there's a need for GST. Okay. So before closing, sir, I'm just explain the definition of India here, sir. You all know what is called India. I'm not giving the whole definition of India as well. I'm just writing the states and union territories in the India. It's okay. So give definition as well. But first, India means India as defined in Article 1 of the Constitution. So as per Article 1, what is being defined? It's nothing but, so if anybody is there, please give a reply. How many states are there in India currently? We'll see how many of you answer correctly. How many states are there in India currently? How many states and how many union territories are there? Okay. So I received a comment as 29. I expected that the answer will come. At least one or two students will comment it as 29. But understand 29 is a wrong answer. There are only currently 28 states. India has only 28 states. It's not 29 states. India has only 28 states. And it has 8 union territories. India has 8 union territories. So I'll list out these union territories for you. So then you'll be having a clarity regarding, okay, what happened to the states and all also. First one, sir, starting from the south towards the in the Bay of Bengal, you will find Andaman Nicobar Islands. So 8 union territories. The first one is Andaman Nicobar Islands. The second one, we have Lakshadweep. We have Andaman Nicobar Islands. We have Lakshadweep. So Lakshadweep, which side, sir? In the Arabian Sea. From Kerala side, you could find the Lakshadweep. Okay, Andaman Nicobar Islands, Lakshadweep, and we have even Puducherry. Puducherry, no, nothing but Pondicherry. Then we have Delhi. Then we have Chandigarh. We have Andaman Nicobar Islands, we have Lakshadweep, we have Pondicherry, we have Delhi, Chandigarh, and then we have Daman and Diu and Dadra and Nagar Haveli. Daman and Diu, Dadra and Nagar Haveli used to be separate union territories, but they got merged and now Daman and Diu and Dadra and Nagar Haveli are a single union territory. Daman and Diu and Dadra and Nagar Haveli. Sir, this will be near to Gujarat. Okay, they'll be sharing the borders with the Gujarat, Daman and Diu, Dadra and Nagar Haveli. Then we have Jammu and Kashmir. Sir, why 29 became 28? Na? Jammu and Kashmir is not a state. Jammu and Kashmir has been de-recognized as a state and was considered and was declassified into two union territories instead of state. So, Jammu and Kashmir is one state and the next one is Ladakh. And the next one is Ladakh. Okay, so how many union territories in India? There are 8 union territories. What are those? Andaman Nicobar Islands, Lakshadweep, Puducherry, Delhi, Chandigarh, Daman and Diu and Dadra and Nagar Haveli, Jammu and Kashmir, Ladakh. So total there are 8 union territories. Sir, if someone asks you a general knowledge question, how many union territories are there? There are 8 union territories in India. These are the list of 8 union territories. But for the sake of GST, for the purpose of GST, there are union territories in India with the state legislature. So Delhi, Puducherry. So Puducherry is a union territory, but it has state legislature. It has state legislature. And even Delhi also having state legislature. And even Jammu and Kashmir also has state legislature. So what is the state legislature, sir? Puducherry, Delhi and Jammu and Kashmir, they'll function like states. Then they'll be, then simple, classify them as states. Now why again add it into union territories? Sir, understand? Union territories are under the control of central government. Delhi being a capital city, it should have more security needed. The state powers or the state police force cannot take care of Delhi. So the central powers are also needed because the prime minister lives there, the president of India lives there, the parliament will be there. So it needs more security. That's why it has been treated as a union territory to have that central control as well. Then Puducherry. Sir, why Puducherry is union territory? It has a long flashback, sir. To summarize it, before independence in Puducherry, instead of Britishers, French people used to live in Puducherry. It's not the Britishers. French people used to live in Pondicherry. Once we got independence, all the Britishers left India and went away. But these French people were never a threat to us. Okay, actually they came and they like India and they got settled there from 1947, before 100 years back, from where in 1830s, 1840s, from there they came to India, they got their buildings, they constructed their buildings and they got settled in India. Many French people from there, 2-3 generations back itself, they got settled in India by 1947. But what we Indians thought means, since we at that time in 1947, we don't have such literacy, we thought Britishers and French are the same because both of them look like, both of them in white color only. Okay, both of are whites only. So we thought them also as Britishers, and the local people start doing, local people start revolted against them. And you are also Britishers, we got independence. Why still you are staying here? You need to go away from our country. Like that, even on French people also, that revolution is started. The local people. So then they approached the prime minister. The prime minister said like, okay, since you are not created any problem to us and not doing any business, you could live here only. We have no problem you living here. Then those people asked security because states cannot provide much security for them because the locals are, even the state governments also have to listen what the locals are feeling. So then central said like, okay, this area we classify as union territory and this would be under the central control, so that you will be having the control of central, so nobody will going to threat you, you could peacefully live here. That kind of understanding or that kind of security has been given by central government. That's why Pondicherry is classified as union territory, even though functions as state, but it is classified as what? Union territory. But eventually, sir, even though it became union territory, the people or the French people got that rebel things or that revolt from the local native people. So eventually, slowly, they have again went back to French. Okay, so now there are not many French people. I don't think, maybe they have properties, but not many French people are still living in Pondicherry as well. So, but that is keep on continuing. Coming to Jammu and Kashmir, sir, considering the security issues, Jammu and Kashmir, we hear in the news as well, lot of terrorist kind of things, and there are disputes between the land border sharing between Pakistan, and even with the Jammu and Kashmir, we are having issues. So, because of that reason, the Jammu and Kashmir need additional central control as well. That's why, even though it functions as state, it has classified as union territory. So, for the sake of GST, these three union territories which are having state legislature are also to be counted as states. So, if it is a general knowledge question, 8 union territories. For the sake of GST, how many union territories? Now, it is only 5. For the sake of GST, how many union territories? Only 5 union territories are there. These 3 union territories with state legislature has to be treated as states only. Okay, we are having 28 states and union territories, and includes territorial waters, which extends up to 12 nautical miles from baseline. We are having 29 states and includes territorial waters which extends up to 12 nautical miles from baseline, and we includes exclusive economic zones as well. Exclusive economic zones which extends up to 200 nautical miles from baseline, which excludes up to 200 nautical miles from baseline. So we have territorial waters which extends up to 12 nautical miles from baseline, and we have exclusive economic zone which extends up to 200 nautical miles from baseline. So now we need to understand what is territorial water and what is exclusive economic zone. Sir, territorial waters gives or significance of territorial waters is like it's our territory. If someone breaches our territory and comes into our territorial waters, they are potential threat to us. We could attack on them. But exclusive economic zone, these lines or these kind of marks are created for our economic activities. So India has the right to carry out economic activities such as fishing, oil exploration up to 200 nautical miles. So no other person can enter into these 200 nautical miles and do economic or business activities. So they cannot even come to exclusive economic zone. But considerably, it's a lesser offense than entering into territorial waters. So when he enter into exclusive economic zone, he is impacting our economic thing only, our business or monetarily only he is impacting. But when he breaches and comes into territorial waters, he is even breaching our security things also. So he may threat to our lives as well. So that's why, considering those things, entering into territorial waters is a bigger offense without a proper approval or visa, is a bigger offense than compared to entering into exclusive economic zones. Okay, then seabed, I mean beneath the water there will be some soil will be there na, beneath in the sea also, beneath the water there will be soil, that we are talking about. The seabed and subsoil beneath the water. The seabed and subsoil beneath the water. And then even airspace above Indian land and territorial waters. Airspace above Indian land and territorial waters. Seabed and subsoil beneath the waters, and airspace and above airspace above Indian land and territorial waters. So the airspace above India is also India only. Okay, so the definition of India is simple: 28 states and union territories. Territorial waters up to 12 nautical miles. Exclusive economic zones up to 200 nautical miles. The seabed and the subsoil, the soil beneath the sea waters is also India, and the airspace above India and its territorial waters is also India. Okay, so hope so you are comfortable with the flow of my classes and lectures. So even though if you don't have any notes or pen, if you're not carrying today, and if you didn't write notes also, but make sure from today, from tomorrow, you carry a notebook and write the notes along with me. Sir, believe me, only when you write the notes will be in a sync. If you ignore or just watching this lecture without writing notes with somewhat, so speed, watching with speed is not an issue. I have heard the students, some students also maybe 1.25 something, the extra speed they put and even write notes, that's fine. But if you miss writing notes, will not be in sync, then you will have a mismatch between my kind of explanation and your understanding, and even you will be deviating to somewhere else, like you will be into dreamings and all. So to avoid all this, write notes. Okay, for today, so I'm closing the session by now, since it's a first class now, so I'm closing the session for now. So we'll meet again in the next class. Thank you. Okay, some 5-10 minutes of revision is enough for us. Okay, so just that 5-10 minutes of revision you do at least for today. Okay, thank you all.